Morning guys, Joel Frank here, market analyst for YouTrading. We've seen an extension of dollar strength this morning, and really it's been a pretty good week for the US dollar. It's moved to 9-month highs this morning, eclipsing very briefly, this is for the dollar index by the way, briefly eclipsing the 93.50 level, taking it very slightly above that Q1 31st of March high, and lifting it pretty much, like I said, to more than 9-month highs. Now, why has the dollar been supported this week? Well, there's been a couple of factors really. I mean, the first thing you should say, it has been a risk-off week. I mean, just looking across markets here, stocks way down from peaks at the start of the week, a couple of percent at least. Commodities have been crashing. Like, I'm just looking at some of the industrial, like copper prices are down, well, a lot. And the Bloomberg Commodity Index, that's also down a lot this week. WTI also suffering. So things have been quite risk off. Market commentators and analysts are talking about continued fears about the impact that the spread of this more infectious Delta variant of coronavirus, how's that going to affect growth in Q3 and going into Q4? Because remember, in the last couple of weeks, we've had negative developments with lockdowns in Australia, New Zealand, Japan tightening restrictions, China still struggling to contain an admittedly small outbreak, but the risks are still there. And we've seen cases rising in the US as well, although the US hasn't gone back to lockdown, but we have seen hospitalizations rising amongst, mostly driven by, unfortunately, the unvaccinated. So that's all a cause for concern. Compounding that has been a string of bad data out of the US and out of China. So you've got these growth fears that would be there anyway, even if it wasn't for the coronavirus. And then Asian markets have been being weighed on even more by concerns about Chinese regulation, although to be fair, that's not having as much of an impact on markets outside of Asia, but it's all contributing to it. But another reason why the dollar would be rallying, because remember, all those negatives help increase safe haven appeal. So you've seen safe haven assets like the dollar, like the yen, the Swiss franc, bonds, all doing well this week. But another reason, and this is dollar specific, is FOMC. Now, the minutes, as most analysts actually expected, the minutes from the July meeting were released last night or yesterday evening, and they were quite hawkish. It pretty much showed, as expected, but did show that FOMC members broadly agreed that the US economy is making progress towards a point where they can start winding down QE. Not enough progress just yet for them to definitively go, yes, now let's start winding down our QE program. But since that FOMC meeting in July, we have had a lot of Fed speak from the various FOMC makers, policymakers, and most of them have been calling for tapering to start before the end of the year. Okay, so basically, yeah, the minutes last night didn't really reveal any new information, but it was hawkish, so it's kind of being, markets are often about optics, and it's all bad optics, and all supportive for the dollar. So that's helped the Dixie, as I said. So let's just look at some of the majors, because we've also seen euro dollar here fall below. If I really zoom out, this 117 level was a key area of support. Well, now we've fallen below that, and we set a low 116.60, yeah, just under 116.70. Your target now for euro dollar is going to be this next area of resistance, another key area. We'd have to go all the way back to November and September 2020. That's around 116. That's the next target if the dollar continues to strengthen. Let's look at NZD. NZD's been an interesting one this week because, as well as all this risk off dollar strength stuff, we've also had this lockdown in New Zealand, stopping the RBNZ from hiking 25 basis points. Before the lockdown in New Zealand, everyone had been expecting this hawkish move from the RBNZ. Well, now that hasn't happened, so NZD has absolutely cratered below this this quite decent area of support around 0.69, and yeah, there's a long way it could fall right now. Aussie dollar I mean, Aussie dollar's been on the back foot for a long time. It just looks to be continuing to fall within this sort of bearish trend channel that it's been in for quite a few months now. GBP not at long-term lows. I mean, it is at its lowest for nearly a month today, but still quite a way above this this July low. So that will be the near-term target should sentiment continue to deteriorate and the dollar to continue to strengthen. Dollar yen, well, that's been range bound, because remember, I've been talking about how one of the big drivers this week has of FX markets has been risk off and dollar strength. Well, risk off has been supporting the yen, because the yen is a safe haven asset. So if you look here, yen is in a range. To the downside, you've pretty much got the 109 level and a little bit below, that's support. To the upside, you've got the upper 110s. This area around 110.70, that's acting as resistance. Really, the main driver for dollar yen is US Japanese rate differentials. So if dollar yen is going to start rallying again in tandem with a stronger dollar, we're going to need to see US bond yields moving higher and the gap widening between US and Japanese bond yields. Finally, dollar CAD also been suffering, just like AUD and NZD and other dollar majors, as a result of risk off and dollar strength. Kind of like GBP though, isn't at that extreme level just yet. You've got this low here from mid-July, or this high, sorry, just under 128. That is the target that the dollar CAD bulls are aiming for at the moment. But yeah, guys, hope you enjoyed this video. Hope you found it informative, and I'll see you all in the next one.